Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on Twitter, GoPro X and CHK daily weekly time frame. So a wild day on Friday, lots of bearish action in the tech sector specifically, but there was definitely a pullback overall. And it was a really nice heads up for Twitter. Obviously, the momentum Friday was due to the market overall, but we saw the bearish action here, and there was a heads up given days ago where we had our lower high and lower low. As soon as we broke 1783, that's a bear signal. That indicates another leg to the downside because of the lack of support built on the way up, and breaking that support level really gives the bears short-term control. So from there, we saw bearish action, a little bullish reversal candlestick, weak bounce attempt, and then obviously no follow-through, no confirmation on Friday, and another big move to the downside. So if going bearish on that signal of 1783, at the close here, that's almost $1 to the downside. That's about a 5% move to the downside in just 4 days by that signal. So those lower highs and lower lows are exactly what the bears are looking for, and that was a clear signal of momentum. So we did fill a gap here to the downside at 1679. There's another gap way down here at 1496. We're not going to be looking to fill that in the immediate future, but we did have a couple bounces, or a bounce off a couple supports, I should say, of 1646 and 1681, the 50-day and the 100-day moving averages. So the big test on Tuesday, or I should say Monday, tomorrow, is whether or not we can hold those levels again. If we see movement to the downside and break 1645, we know the bears are still in full control, heading to further lows. And if those levels do hold, we're going to be looking at a back test of the 200-day moving average if we do see the bulls get some momentum. But if the bulls do get momentum, we will be looking for a lower high to be set to continue in this downtrend because of the significant volume that the bears have had 3 out of the last 4 days. So if we do bounce and hold 1645 on Monday, Tuesday, early next week, we will be scouting a lower high to form, and 200-day moving average resistance will be a target as a potential bearish entry point of 1752. The weekly time frame from Twitter here, we started with 3 weeks of very healthy consolidation. The 4th week, it looked like the bulls were going to see continuation. By the end of the week, we pulled back, had an upper wick of profit taking, and then another dump this week to the downside with some significant bear volume. We did fill the gap on the weekly time frame. The question now is going to be, where will the bulls form a higher low? And I do believe we will form a higher low compared to where we came from here from the lows. And this middle Bollinger Band weekly support is another level to be watching, 1636. So daily and weekly moving averages on Twitter worth watching. GoPro, I'd say the GoPro bulls are very pleased with how they held up. Clearly, the 50-day moving average is resistance, 5 days in a row rejecting from that level, and we have started to break the higher low pattern and now set lower lows. So support is 833, 828, and then down to 802. And after those 5 rejections, the bearish momentum starting to creep in a bit here, and it's either the bulls turn the 50-day moving average into support and see some short-term upside, or we see a move back down towards $8. And again, I'm keeping an eye on this gap. Lots of space to the downside on this gap, and we'll have to be watching very close to see if we are headed to that direction, and breaking $8 support will be a nice indication that is happening. No follow-through from the bullish reversal candlestick 2 weeks ago, and an upper wick showing profit taking, rejecting from the exponential resistances, inability to get over the middle Bollinger Band or even test the middle Bollinger Band weekly resistance over the past 2 weeks. Bears still have a firm grasp on GoPro. X-Bulls saw some profit taking as well, a bearish reversal candlestick after hitting higher highs, and a new resistance level has been set here. That's at 2265. Now the bulls have to pull back, form a higher low, and then see a break of 2265 to be looking for continuation. The upper Bollinger Band is 2177, and we did close above that level, keeping it as support. So as with the GoPro bulls, the X-Bulls have to be pretty pleased that they were able to hold up and stay in breakout mode on such a bearish day. So support 2152. Bulls ideally want to hold the low of Friday on Monday to keep that momentum in their favor. But if we do lose that level, we are looking down towards exponential supports and potentially even that middle Bollinger Band. So bears could be creeping back in here, but the bulls, in my opinion, are still in control right now over this bounce because of the move we saw on Thursday. So even if we do break 2152, I think that may be a decent opportunity to be scouting for a bullish entry point with an exit criteria if we were to lose the daily middle Bollinger Band. And the weekly time frame, we can see a pretty solid end of the week. We do have that clear 200-week resistance of 23 on the dot, and we're in a channel right now. We've been in this channel the last 3 weeks, bouncing off the 100-week support, rejecting from the 200-week resistance, and we'll be watching to see which direction from this channel we do break, and that might not happen for a few weeks from here. And again, it's the close on these weekly candlesticks that we're concerned with relative to these moving averages. CHK has been a bear due to oil and natural gas weakness, setting lower highs and lower lows, but a pretty bullish day on Friday here. But it's just another lower high at this point. We have not seen 2 green days in a row on CHK since the 20th and the 21st. So very clearly, I should say the 18th and the 19th, there was a weekend in there. So very clearly, the bears have been in control with the lower high, lower low pattern following through. And we are still rejecting from exponential resistance at this point. So the bulls haven't proven anything. And in my opinion, they're going to have to break 508 and 522 in order to start turning things around, breaking resistances and looking for some higher lows and higher highs to begin forming. We will be keeping an eye on things because we could see momentum shift with this sector rotation. If money leaves the tech sector, we could see money come into the energy sector, which obviously CHK would benefit from. But at this point, like I said, lots of proving to do, and longer term, it's all about the 100-week resistance. You cannot have more clear rejections. 1, 2, 3, 4, 5 rejections from the 100-week resistance. Bullish reversal candlestick on the weekly, absolutely, but we're going to have to get over that 100-week moving average to change this trend of lower highs and lower lows. So that's what we've got heading into this next week. All in all, I'd say the bears on this list didn't really get the kind of follow through that you would expect on that weekday, but then again, it was the tech sector that saw the vast majority of the weakness, and we don't have too many tech sector names here on the list. So we'll check back in on Monday and see what kind of follow through. Follow through is going to be very important. Do the bulls buy the dip? Do the bears keep in control and push back down to the lows that we saw on Friday? And we'll check back in tomorrow after hours to wrap it up. I appreciate you watching. Have a great Sunday.